that the market always respects. So usually, let's say I want to trade on USD/JPY, you like to do what they call mock-up, right? So on this USD/JPY, these lines you see here are my resistance and support lines, but the lines that you see as red are the resistance and support lines I drew on my 1 day. So the first thing I do is I go to my 1 day. So let me take this out a little bit and I'll come back to this chart and explain why I got into the trade. So let's go to USD/CHF, for instance, like a new chart altogether. Or let's go to a random one, USD/CAD. This is Emmanuel's favorite pair, I don't know why. Okay. So the first thing I would do if I want to trade USD/CAD is not just to jump on the trade. I'll first go to my daily chart. And the reason why I'm checking my daily chart is because I really want to know what is going on for the day. Because if it takes one candle, if one candle forms in 1 day, that means going back in time, that means each of these candles is one day. So going back in time, this is like a whole lot of information. If you keep going back, you know, this is as far back as like, this part is as far back as January. You can see this point here, it's telling us 26th of January. So we really don't want all that, right? We're in March. So I'm just going to take this back a little bit. So the price is currently here on the daily chart. So what is my plan? I really want to know the resistance and the support lines within the day that has been respected. So these resistance and support lines, I'm going to mark them with red, meaning that any time the price comes to this particular point, it is most likely to reverse, right? So I'm going to draw a horizontal line. I'm going to mark it as red. And now this is the current price. So the first thing I want to do is I want to change my candlesticks to line. Why am I changing it to line? Because it makes it easier for me to draw the support and resistance lines. Now, this is the current price, right? Now, you don't just draw your resistance and support lines anyhow. You want to draw your resistance and support lines in such a way that you are sure that the market is going to get to that point. Now, watch. Just keep watching. Let me just take this out a bit. Now watch. Now you can see this point here. Now this will be my first red line. And what here is telling me is that at this point, right, here was resistance at this point. You can see it formed resistance here, and then it forms support here. That means for some reason, the market always finds its way around this point, right? Now for the day chart, we want to draw a resistance and support line around this current price. And the reason is this: before these lines can be broken, it's going to take a couple of weeks to months. So you really don't want to draw so much, because if I start drawing my resistance and support lines up to this point, then I'm basically wasting my time. Because if we go back to the candlesticks, you're going to notice something. This price got to this point here. 1, 2, 3, 4, 5, 6, 7, 8. It got to this price 8 days ago. So we really don't want that now. So I'm going to go back to my line, and then I'm going to keep on drawing my resistance and support lines. So you can see this point. The price, the current price in the past respected this point. Now I'm going to go back to the USD/JPY, which we want to do. So I took the trade for USD/JPY based on the 4 hours chart, and then you're going to watch now. Sorry. Now look closely on this chart. You will notice that the day one support stroke resistance line I drew was here, right? And the price got to this point. So it was most likely going to reverse here, right? But as a trader, you don't want to just base your fact that, okay, let me set a buy limit for this red line, knowing fully well that the market will most likely respect it for the day. So what did I look out for? I tried to look out for confluence. Confluence basically means you are trying to check the market at a particular point where the price is most likely going to reverse. But you want to use more than one confirmation. So what is my second confirmation? Support. The second confirmation would be demand stroke supply zone. A demand stroke supply zone basically means a zone where there's an upshoot or a downshoot of price. Basically, when you have a bullish or a bearish pattern. So ideally, let's look at this. This is where we took the trade for the 4 hours. Now, let's trace this line back in time, right? Please, I would like everybody to unmute yourself so that as I'm talking, you can say yes or something like you can hear me. Because if I'm not hearing anybody, I just feel like I'm talking to myself.
Yes, sir.
All right, so can you guys hear me? Sorry.
Yes, we can hear you.
I can hear you.
Yes, I can hear you. I can hear you.
Me, I can't hear anything. No.
Sorry. Emmanuel, please, can you mute everybody and leave yourself on? So you be the Hey guys, okay, you guys can. Emmanuel, can you hear me?
Yes, yes.
Okay. Now, this is where we did our buy. Now, I want you to watch closely. This is the current price. Now, look. Okay, let me erase everything I have here. Sorry, just hold on. What I'm about to show you at the moment would blow your mind. Now, this is my chart. Sorry, this is my chart, yeah? Now, watch. Now, a supply or demand zone is basically a zone where you have a strong bearish or a bullish increase, right? Increase or decrease. Now, watch. This is a strong bearish trend, right? It went all the way down from this point, right? This is a strong bearish trend. Now, I can call this my supply or demand zone. You watch that? This can also be my supply or demand zone. Price went up strongly. So for you to mark your support and demand zone, usually use your rectangles, and I like to color mine yellow. Now I'm going to mark this supply or demand zone, which is basically here. To draw your supply or demand zone, you draw it from the body of the previous candle, right, to the open of the next candle, or basically the end of this red candle that caused the bearish movement. So I'm going to draw this all the way down. Now watch me. Now, what did you notice here? That this price, when it got down, respected it. Now, remember that I cleared all my lines that I drew on this chart. Now, I'm going to go to the day chart and I'm going to show you one thing now. Now, this is the current price. I want to draw a resistance line around the spot. Now, you can see where I'm drawing my resistance line. If you check closely, prices were struggling around this region. But you don't just draw your resistance line that way. What you'll be ensuring is it served as resistance for prices coming up to this particular direction, and then it acted as support upwards. Now, if you want to draw a particular line where prices were struggling, it must cut across a lot of weeks. You can see that it cut across a lot of weeks. Now, let's go back to the 4 hours. Now, this, okay. Now, this is our buy, our supply and demand zone. And you can see that we have a resistance line just around the supply and demand zone. So normally, the first thing I'll be doing is I want to be watching this zone, knowing fully well that there's supposed to be a price reversal around this zone, right? So the next thing I'll be doing now is, since price is reducing at this point, and we knew that this increase, which is, okay, if I have to cover up this chart, I just hope you guys are following me. If I cover up this chart all the way back, if we take this price backwards, right? What kind of trend can we call this? We are seeing lower lows. This is a downward trend. And then there was a break in structure. And then this eventually turned to an upward trend, right? Now, the first thing we are supposed to notice at this point is this. For this to have been an upward trend, it retraced at this point. So we are going to grab our fib retracement fib retracement tool. I would really want to know where this price retraced. So let's check this. To use your fib retracement tool, we are going to draw it from the first low to the most recent high. So I'm going to draw this here. This is the fib retracement tool. I'm going to draw it all the way from this to the high I can see. Now, if we, let me just drag this a little bit. Okay, if we look closely here, what happened? Prices reversed at 38.2, and then it continued upward. Now watch. This is my most recent low, right? And I'm going to draw the Fib retracement again. The most recent low to the most recent high. What did you see here? Prices are also, the price is also reversing at 38.2. So when we got into this trade, the price was somewhere here. I already knew that this is an area of confluence. And also I know that an area of this particular line, here, sorry, I didn't even put this right. This line is supposed to be here because this is where I'm seeing the resistance here. So this particular line from the D1 is around my area of confluence. So I knew that there was going to be a price reversal around this area, right? So I immediately set my buy limit. When I did set my buy limit around this region, I'm going to limit for what I drew. What I was hoping for was that as price begin to hit here, I want to see a candlestick that will form on the H5, sorry, the M5, that will signal that the price is going to continue in the direction it was going, which is the uptrend. So I'm going to show you this yellow line on the M5. This line you are seeing here, I'm going to mark it down. Just hold on. That's the area that we took the price. So I'm going to check that on the H5. Sorry, on the M5 rather. Now, this is, try to zoom in. Now, this is that very, M5 is basically a lot of information compared to the H4. Now, this is the area where I drew that circle. Now, if you notice something here, if you check closely, you can see this candlestick here, which is more like a bullish candlestick. It was formed directly on the area of confluence, which basically tells you that our price is set to continue upwards, right? Now, the point of entry at this point would just have been here. Now, what have we succeeded in doing? We have been able to confirm that line as the point where the price will continue upward. I hope I made sense. Emmanuel, is anyone with me?
Yes.
Yeah.
Did I make sense? Like, if what I said made sense, please type 222 in the chat. Okay, I really just want to say this here. Just so you understand the long grammar I've been giving from beginning to end. I want you to go to YouTube and read about Fib retracement. Now, I want to really explain the idea behind my take profits. Now, remember that anytime your entry should be based off your 5 minutes. I have to go to my 5 minutes to confirm where the price is headed. The reason why I took my entry, or rather, I set a buy limit.
Sorry. Your entry should be based on what?
My entry should be based off the 5 minutes, and I'll tell you why. The reason is this: I hate drawdowns when I'm trading. I hate going into negative all the time. So if I know that this is an area of confluence, some people will just directly go here and click on the buy. But no, you shouldn't do that. What if you click on the buy and this price is going down? You want to click on the buy on the buy. Like this green is already signaling that this is heading the direction you want. Some people like to go against the market, buy when it's selling, and then it goes in that direction. But over time, I noticed that doesn't even work. It always gets your account to explode. It destroys your account basically. So if you want to do a buy, if you are not setting a buy limit, your best point to buy would have been on this point where the sellers. Let me take this out so you see the picture I'm trying to create here. Sorry, just hold on. I want to make sure. Okay, I'm still with you guys. Okay, so the reason why I said you have to, when you are making your entries, you have to base it on the 5 minutes is this. Remember that this is the line that we're most concerned about, and this was our area of confluence, right? Now, the reason why you have to check your 5 minutes before entering is this. Now, this was still our area of confluence. But imagine if you did your buy somewhere here, you would have had a drawdown all the way down before it finally goes off. That means it would have had a drawdown of up to like 5 minutes down to this very point before it will eventually go up. And that was what we experienced in our buy limits. And that is the reason why I hate doing buy limits, actually. I like doing market executions. Because immediately I've seen that there's a drawdown, I'll be waiting for the next candle to signal me to buy. So what I'll be waiting for is I'll be waiting for the green candle, which is a bullish candle, to close on the line, which was what I saw here. It closed on the line. This candle closed on the line. That means after 5 minutes, this candle closed on the line. Immediately it closed on the line, I would have done my buy here at this point where it closed on the line. And that would have been a very good entry for everybody. Most times, the reason why we get it wrong is because we want to be in the hell of a profit and then, everything goes south. Now, I'll go back to my 4 hours. One of the questions that, people keep asking, I'm not perfect myself, but I had to find out something that works. My way of trading might not be the same as every other person's own. But what I've noticed over time when I was practicing my demo account is that my way of trading happened to be consistent. And if it's consistent, that means you are doing it right. Now, I'm going to show you how to get your take profit, right? Now, watch. This is your 4 hours chart. Now, can you see any kind of exhaustion candle? Yes, I can see. Watch. You can see a lot of exhaustion candles around this area, right? You can see. Prices were struggling around this area. You can see that. Now, for a particular place on this trade to hold as a take profits or take profits one or whatever, that line you must be drawing as your take profits must cut across all these lines. That means you're looking for the median. You want to ensure that it is touching as much lines as possible. So let's see this. If I draw this line here, is it cutting across all? Yes, most likely. Almost all of them. Now, the price is currently here, right? For everybody. If you want to do your take profits one, you can do that here. But if you do your take profits one here, that means you're not a very good trader. Because remember that this is in an uptrend already. For every time it retraced, it's formed a new high, which is a lower. You can see this is one low. This is let's call it 1L. This is 2L. This is a higher low. This is another higher low. So we're expecting the higher low to be more than this price where it retraced. So for me, your take profits one should even be higher than this retracement price, which is going to be somewhere here, of which the price is still going to get past here. But for it to get past here, you are looking at late night today. Not necessarily now, because we are dealing with like 4 hours chart. But if you are the type that does not necessarily have patience, you can set your take profit here. And the reason is this: it will definitely hit this price. Why? Because you can see that almost all prices, almost all parts of the market struggled at this price. You can see the week, and if we set this line here, it cuts across almost all the market trend, meaning that every time the market forms a pattern within this region, it always turns out to hit this particular point in the market. And the market is always repetitive. It always goes back to where it comes from, somehow. So since this is continuing an uptrend, it's most likely going to, not even most likely, it is 100% going to go up. And if it's going up, it is obviously going to beat this retracement you are seeing here. So it's going to get past this level, which is 106.923. Do you get it? I hope everybody gets me. Emmanuel.
Yes.
Yeah, we do.
Okay, can you hear me? All right. So imagine if you want to do your take profits on lower time frames. Remember that your analysis was done on H4. Now I want to tell you the reason why resistance and support varies per time frame. This is it. If I check H1 now, you are going to notice that my point of resistance for this particular price is going to vary. Now let me take this a little bit back. Now you can see that the price struggled at this point, right? So let me put a line here. $106.632. Right? Now, if you are the type of person that is always in a hurry to take your profit, you can set your take profit one at 106 points, this particular point, which is 106.639, and it is going to happen before you even sleep. So because I'm dealing with a H4, like since I'm dealing with H4, knowing fully well that this takes 4 hours, imagine the amount of candlesticks that it will take to hit this point. We're looking at about 2 candlesticks. So 2 candlesticks for 1 hour, we're looking at this happening in like 2 hours. You get, depending on how the trade goes. But usually when I do my analysis based off H4, I always do my take profits on H4. I don't know if that makes sense. Some other people who want to really scalp fast, they will go and do the analysis based on 15 minutes charts so that they can just do a quick scalp and go. But the truth of the matter is, if you really want to make all those pips, like the main money moves happen in the H4, and I'll tell you why. If I take my pip measurement and I drag this all the way from here to here, this is 33.2 pips, right? Now, let me drag this all the way to where personally I set my first TP. This is 72.3 pips. That means for each one lot size I did, which is expected to give me $10 per pip, on each one, I'll be making $730 minimum. Doing that 4 times, that's already $2,800 based off the fact that I understood market action, like price action, understanding where price is supposed to head to. Do you get it? And one of the ways you can also know that this price was also respected is this. Around this price, immediately the next candlestick was formed, it totally respected this area. You can see this found it found its new support on this line. So it totally respected this area. So most times when people tell me, Kene, is this still buying? Let me buy. The reason I tell you, hey, calm down, you can't buy when I'm buying is this. We all enter the market separately. So if you do a buy now, let's say you do a buy now, this price is most likely still going to keep retracing. It might even retrace up to this point. But the major thing is it can't go less than here. It will just keep playing around and then go back to where it wants to be. So imagine if you did a buy here, what do you think will happen? If you did a buy here, I will show you what would have happened. If you have a little drawdown, you would have been on negative 19.6 pips if the market doesn't go in your favor. So you cannot buy when people are buying. You always have to look for a point to buy. You always have to look for a point to sell. I don't know if that makes sense.
Makes sense.
Doesn't make sense. Exactly. So let's check something entirely different. Let's not look as if I'm basing my analysis off USD JPY. Let's check XRP, because XRP is one of my favorite, but it's just that Ripple is, for you to trade Ripple, you must have over $500 in your account. So for Ripple, the first thing I always want to do is, I should have analyzed this a while ago. It should reflect. I hope so. Anyways, for you to trade crypto, your account balance must be above $500. Just to be careful, because you can see the way it's spiking up and down, but it can still be analyzed. So the first thing I would like to do, based on what I said, is what? Draw your lines on the daily chart, right? So I will change this to lines. And what am I looking out for? I'm looking out for places around the market where I had struggles. So the first point will be somewhere here. Sorry, I took the wrong tool. Okay, why did I draw it here? I can see this spike here, it was respected. This spike here, it was respected. And then I can also draw here. No, that one is irrelevant. Let me take this out of 1 day and go to 4H. There isn't so much on the daily chart. Okay, there's a lot on the the 4 hours chart. The reason I hate drawing on the 1 day chart is when it comes to crypto is not regulated. So most times, if it's going down, it can give you a lot of profits in minutes, and it can give you a lot of losses in minutes. So you really want to be, drawing your resistance and support lines mostly on the lower time frame, which is like 4 hours, 1 hour, and all that. So if we are to draw this now, let's see. We say so this would be a good spot. Okay. This will also be a good spot, right? This would most likely also, okay. This is a good spot. This is a good spot. You can see the spikes. This is a good spot. At this point where I drew it, it is not so relevant because if you notice, it didn't really struggle here. So let's say price is going bullish and is heading towards this line. It is not going to respect it. It's going to take it away. So I'm going to delete it because it's irrelevant, right? We want a particular point where prices struggled so much. So here, prices struggled. You can see that. Here, it formed resistance here. It formed support here to go up. It formed support here to go up. Resistance here. So let's go to the 1 hour time frame. Now for crypto, I always trade off most times through the 1 hour. So for this 1 hour, I'm going to turn it back to candlesticks. Now you're going to see. Now I like to draw things that are big. From my 1 hour, I like to draw my lines off the wicks, as much wicks as you can touch, right? So I can see that prices struggled. Sorry, I made a mistake from the start. If you are drawing on your daily chart, your line should be red. If you are drawing on your 4 hour chart, your line should be green. If you are drawing on the 4 hours chart, your line should be green. If you are drawing on the 1 hour chart, the line should be blue. And the reason I like using red as my daily chart lines is because that's a danger line. It tells you that it is most likely a reversal line. On the 4 hours, I use green because it's telling you that it might respect it or not. So I'll be looking for confluence at that point, just like that. So at this point now, I'll be looking how to draw this now. This is a supply or demand zone. You can see that price spiked downward. So I want to know, this is the previous candle that caused the spike. I'm looking for a green, and then the next candle that caused it. So this down is a supply or demand zone, right? What this particular point is telling me is this. If this price for any case comes to this point, I can also see a particular line from the 1D. What that is telling me that this is most likely going to reverse. It is most likely going to reverse. So you want to check for additional confirmations, right? Now, let's see whether there is any other line we can draw. Hold on. So for this trade, I would not necessarily take it. I want to get within this consolidation zone, this place that prices are alternating. And one of the things you guys should be looking out for is always consolidation zone. If you see a consolidation zone, just draw your support and resistance line within those zones. Check the places it's spiking to, and then wait for it to come down. If it comes down, most likely make your take profits one the midpoint. So if it comes down, just make this midpoint the take profits one. Because most likely when it comes down, it will always go up to the next resistance. Do you get it? So I always trade consolidation as well. So yeah, back to the USD JPY. Uh, 4 hours. Yeah, so I hope with this little thing I've been able to explain the idea of you trading with your support and resistance lines, the idea of you respecting Fibonacci, you will be able to understand me. Now, the one thing I would just advise is this. I've talked about Fibonacci, right? And which is like the major thing you need to learn, which is basically the way to know price retracement levels, why is it retracing at this point, 38.2, and why this also respected 38.2 as well. So what I just want you to do is go ahead, do your own research, go to YouTube, check why the main Fibonacci levels, their retracement levels, 64.8 and all that, are their change in price levels. Once you understand Fibonacci and how it works, you would always be in profit. So I really hope that I've tried to educate you guys. And then, yeah, for those who got into the USD JPY, let's keep kicking it. Thank you so much. Yeah, Emmanuel, you can take over.
All right. So, guys, this was really an amazing call by Kene. This guy took his time for this. I know for some people it might not make sense. For some, it really made sense. So what I really did was I recorded this call, and what I'll do is I'll post it on the group. So at any time you want to go back, just check back again and just look at what he said and analyze it and, replicate the same thing. Then you can always do that. You can always, message him to ask him questions and all that. I appreciate your time for coming on this call. It was really a great call. I really appreciate you. So guys, just, put on the chat box, thank you, if you really, saw so much value from what Kene did. Just to show him some appreciation, just, put on the chat box, thank you. I think he really did an amazing job. So Kene, really big ups for all that. And
Gracias. Gracias.
Yes.
I'm actually saying gracias based on you guys. Oh, sorry, I don't know. Anytime I'm on call, my phone will keep on hanging. I don't know. Emmanuel, yeah. I wanted to show you guys my profit. I'm currently up like $700, and we are still counting. So you guys, thank you so much.
That's it, brother. Keep on the good work.
Who's this person that said that?
All right, now, later, guys.